Hey everybody, it's Pete. Good morning. I gotta make sure the sound is on. Good morning, everybody. In today's video, we're going to talk about some stock picks. We're going to actually have book recommendations today, something I picked up last weekend that I think is just awesome. Anybody looking to buy stocks will definitely benefit from the one book that I want to talk about. We're going to talk about Roku and whether or not Roku stock is a buy right now. We're going to read the tape in Roku together. We're going to do a little bit of a deeper dive. I'm going to take you behind the scenes into our real-time Discord community and show you some of the insights that we have, because yesterday we mentioned something called the bullish echo and how that bullish echo translates into position sizing, which also in today's video, we're going to talk about understanding how to use a stop limit order versus a stop market order and how to cut the spread when a stock has a wider difference between the bid and the ask. So we got stock picks today. We're going to talk about Roku today. We're going to talk about some deeper insights into trade management today. I'm very excited. We have a lot to cover today, so I'm going to be back in just 1 second. Okay, so thank you for joining me here today, everybody. I really appreciate it. Everything we speak about here today and in all the videos that we do are for educational purposes. It's up to you to make that final decision. It's up to me to help you make better decisions. That's my mission, to help you make better decisions. Oh, actually, something else we're going to talk about today is something that's pretty cool that I just recently came across myself. I haven't started using it yet, but I definitely plan on trying it right after the holidays, which is, if you're not familiar with using hotkeys, it's a world of difference, especially if you're a day trader. Not so much for swing trading, but definitely absolutely makes a difference. I'm going to introduce you to something that I think you're going to really, really like. We're going to get into Roku in just a second, but I just want to talk about this. I'm sure everybody's seen this book, Market Wizards. Pop that up there so you can actually see it. Kind of a foundational book. You know, everybody talks about reminiscences of a stock operator and understanding if you're getting ready to buy stocks. It's probably one of the classic stories to understand all the ups and downs and everything that goes into trading. One of the interviews in here is a guy named Larry Hite. Basically turned a small amount of money into millions, right? We all know those kind of stories, right? But Larry actually just came out with another book, his own book. So you can see the guy's name there, Larry Hite, How I Beat the Odds and How You Can Too. So obviously it's a pretty strong statement. It's a very easy book to read. But I think the biggest thing that I want to point out here in the book is that Larry is a trend follower. And if you don't know a trend follower, first of all, it's a pretty good book. You can probably read it in like half a day. Larry's a trend follower. And I want to talk about what that means, because one of the biggest questions that we get is understanding how long to hold a winning trade. That's a big part of trading. And we want to make the distinction when, if you know anything about the way we do things, which is our program is called the New York Method, right? And the boot camp is designed to teach the New York Method. And the whole point of what the New York Method is and why what we do is differently. When I first started trading, I was nothing but a NASDAQ trader, and we just traded nothing but momentum. So we're going to make a distinction between momentum trades and trend trading. Momentum trades, you're generally looking for stocks to move in your favor, and as soon as they start to slow down, you get out of that position. And then you look for the same thing to unfold again. It's kind of where we talk about the push and the pause, the push and the pause. So if we are looking at, let's just say for argument's sake, we're going to talk about Roku today, and you see Roku bouncing, and you end up seeing a candle that looks like that. Now, if you're a regular viewer of our channel, you know that we only look at two candlesticks. And this is the distinction between managing winning trades from a cash flow perspective, managing winning trades from a longer term wealth building perspective when you're buying stocks. Not all situations are the same. So there's two different ways of managing trades. There is the type of trader you want to be, which is a momentum trader where a push and a pause, you're getting out, versus a push and a pause, you're letting the stock breathe, you're letting the stock pull back in exchange for the next bigger move. Now, what's the difference between those two types of trades, right? What is the difference, and what's the pros and cons? First of all, I would strongly recommend that you understand the difference and make a decision of what type of trader you are. And it really comes down to the pros of momentum trading are your win rate is a little bit higher, your booking profits a little bit quicker, the downs and your risk is a little bit smaller as far as the stop loss and that kind of thing, because you're kind of getting in, getting out, getting in. As soon as it goes up, you're out. When you recognize it slowing down, the downside of that is you're going to be saying, wow, there's a lot of trades I should have made more money and I didn't because it kept going. And that's where trend trading comes in. So if you could imagine a push and a pause, momentum traders out of the position, and that's the way that trading strategy works. A trend trader, which again, if you didn't see the book, allows unrealized profits to go down in exchange for the next big move. So I'll just give you like some numbers. You can actually see this on, let's pull up Apple, because Apple's actually been pretty strong. So you get these kind of moves where it goes to the upside and then goes sideways. So it goes to the upside and goes down. The trend trader will be allowing these pullbacks to unfold up to a certain amount of time where they're willing to give back some of that profit in exchange for the next bigger move. So the downside of that is mentally you have to be okay with handling giving back some profits. The massive upside of that is that you are risking small gains in exchange for much bigger gains. Now think about this for a second, because trend trading versus momentum trading, trend trading is actually tougher, which is why you make a lot more money when you master it and when you become good at it, when you understand the strategy, because mentally is the difficult part. If you read Market Wizards, and especially if you know the story of the turtle traders, a lot of the turtle traders who washed out of the program, who were given millions of dollars to trade commodities, couldn't handle the mental drawdown of a trade being positive by $3 million, going down to where they were only up $1 million, in exchange for that now becoming an $8 million profitable trade. So you need to mentally decide which of those kind of traders am I. Now, in our program, in the boot camp, I just want to give you some deeper insights. Everything that we're doing is to try and help you think about things when you buy stocks to make as much as you possibly can within the context of your resources and your mental makeup. You know, a lot of people don't want to allow stocks to breathe. They just want to give me the perfect timing and the perfect exit, and I'm done. So again, just to give you some context, and I'm going to zoom this out just so you can see it a little bit here. Right here, this is probably the cleanest picture of, you might want to take a snapshot of that, right? Where we have energy candlestick, energy candlestick, energy candlestick, right? Big difference between the open and the close. That's why it's green, right? Open down there, closed up here. Then you get indecision. And that's what stops this momentum move to the upside. So you got to push down, melted candle, indecision, push to the upside, indecision, and you're out. The trend trader is allowing this to breathe a little bit in exchange for that kind of move to the upside. So what's kind of cool about this is where, you know, we hear us talking about scripting stocks, scripting the idea, scripting exactly what we need to see. We're actually going to talk about the bullish echo today. We're going to obviously talk about the reversal in Roku. But what's super, super cool, if you remember yesterday, we talked about the bullish echo, right? So we mentioned it. Once you know what kind of trader you are, and we're going to talk about this in a little bit more detail if you want to take a snapshot of that. Once you know what kind of trader you are, then it becomes 10 times easier to script out exactly how you plan to manage your trades that don't work out, your trades that do work out. Now, we want to talk about another situation where the difference between momentum and trend trading comes into play. And it comes back to what we talked about yesterday with the bullish echo, where we just said momentum versus trend trading. You have to decide which of those types of strategies meet you personally. Like we all have baggage coming into the market. We all have a certain amount of money coming into the market. We have a certain mental makeup coming into the market. Now, I know you probably have the question first, right? Which is, well, how do I know which of those two I am? Well, I got news for you. You have to trade to learn how to trade. And again, something we spoke about on a coaching call last night, which is how do I know, or how do I get to the point where I'm actually learning without risking too much? And in my experience and in my opinion, if you can trade 100 share lots while you're learning, so you buy 100, you sell 100, you buy 100, you sell 100, if that's possible. Again, everybody has different size accounts. Try trend trading and see if that works. See if you're okay with it pulling back in exchange for a bigger move. Remember, you're giving up a small unrealized gain for a much bigger gain. And that's really where risk reward comes into play, because when you understand risk reward, and again, mentally, we're all messed up on these losing trades. Like, oh my gosh, I hate losing trades. I can't stand losing trades. But again, tying this back to the fact that you're running a trading business, if you have a business that does $10,000 a month in revenue, which again, trading profits, or you're selling widgets, egg sandwiches, it doesn't make a difference. Do you really care that you have to pay for the eggs or the inventory, and that's going to cost you $2,000 this month, but you made $10,000 a month? You're not going to care. You're like, okay, write the check, pay for that expense, and we're going to keep the other $8,000. Then you throw in some caterings on top of that, and now all of a sudden your revenue goes from $10,000 to $18,000, but you still have those same $2,000 in expenses. This is where, and I don't say this lightly, this is where the pain of losing trades vanishes, because you're understanding how to make more on your winning trades. Everybody's heard the whole thing, 3-to-1 risk reward or greater. This is where the greater part of it comes into play, because the more revenue you're making and understanding the mental part that if you make 1,000, let it pull back, now you're up 700, but the conditions are still there, and now it becomes 1,500. That adds up to a gigantic difference over the month. That's just the first part about understanding which type of strategy you want to implement. The second part of it is what I want to talk about here with the bullish echo. And I'm just going to pull this up on the screen again so you can take a snapshot of this. Okay. So yesterday in the coaching, Brian actually had mentioned, and we talked about it, bullish echo is obvious bullish bias. So that's clearly what we have in the market right now, right? The last 3 to 5 days, the market's clearly going up, but a stock is traded higher into a large portion of what is called as average true move, decreasing the viability of a new swing trade from a risk reward context. But an active trader can get involved seeking one more day of bullish pressure. So we just talked about momentum trading versus trend trading when the conditions are good, based on which of those strategies you want to implement in your trading business. The bullish echo, where we talked about it yesterday, where it's going higher, and reach the point where if you put on a new swing trade, it doesn't make any sense. So in this case here, we're talking about your momentum trading for one last day, because the likelihood of the market turning around is pretty good based on understanding tape reading. So that's kind of cool that we just taught everybody this yesterday, and now we're jumping right into understanding there's market scenarios where trend trading might not make sense. So in this case, we're looking for it to pull back versus, okay, the bigger picture is probably going to pause, and we're seeing the market pull back now. So this morning, the market's pulling back. So now we knew yesterday not to put on new swing trades, because in that situation, the upside potential was lower. So remember, the reason we choose to take risk, the reason we accept risk, is because we think there's a good chance of it continuing. So in this case here, by learning to read the momentum, even if you're not a momentum trader, learning to read the momentum stops you from putting on new swing trades, because the odds of following through are smaller. Now, I just want to finish up with one more thing. I want to show you inside the boot camp of some of how we discuss these kind of things. And what I'm going to show you is from one of our members, Dilip, who's like a crazy deep into doing statistical analysis and that kind of stuff. But then how do you use that statistical analysis to formulate trade ideas? So I just want to show you this because it's super, super cool. So let me actually bring this out. And the part that I want to point out here, what Dilip put in there yesterday. Okay. So sharing some broader market ideas. All right. Let me actually, I think you can probably see that, right? Make note of how many stocks are making new 20-day highs versus 20-day lows. So think about that first, right? So we're talking about this right here. You probably can't see that. That's okay. So you're actually going in and deciding, I'm going to determine the likelihood of following through. So then Dilip takes it even further. The first 2 weeks in November in the market, all-time high, all-time close, the ratio of 20-day breakouts versus breakdowns, right? Then from the 17th to the 23rd, not all buying on that day. Last week, plus early December, turned bearish. Now, I don't need to get into all of the detail here. If you want, you could snapshot that and take it. This is the point that I want to get across. And we talked about this yesterday, and this is going to apply to the Roku trade that we're about to take a look at. Understanding when is a good time to buy is the second step. Now, I know that sounds obvious, right? But it's not to a lot of people, especially a lot of people that come into the boot camp. And we had a lot of people raise their hand yesterday by saying, raise your hand if you think you're always in good ideas. But as soon as you buy those ideas, they go up one day and pull back 2 or 3 days and you're like, and you take your stop loss, you get out, and it does exactly what you thought. This is the second step. So yesterday we talked about priority number one is understanding order flow. So the way that we do that, that's stacking the order flow. You start out with the market, you go up to the sectors, you go up to the industry groups, you go up to the stocks. The second part of what we're talking about today, the reason you would want to trade the bullish echo and not put on a new swing trade and save yourself from that agony of timing too late is because that situation is only a momentum situation. So it's kind of cool to put those pieces together. And, it all stems back from Larry Hite is a trend trader, and he only looks for those bigger scenarios, which is kind of cool. So he's getting involved during the pause. So if you want to take a screenshot of this, I'll put this up here for you just one more time. If you want to take a snapshot of that so you could read the thought process of the way we do things in the boot camp. So I'm challenging you. Again, if you're on this again every day in the morning with me, I'm challenging you to think a little bit deeper. If this kind of stuff is new to you, this is what we do every day. This is the whole point of, taking a step further. I see Ruby's here right now. Ruby's in the boot camp with us. Thank you, Ruby. Really appreciate that. This is the difference between I know how to read charts versus I'm understanding how to be a trader. We mentioned it yesterday. I'm going to mention it every day. If you want to take money from some of the smartest people in the world, you need to understand how to read the difference between momentum, which is the push, versus the next big move. Then you need to decide, am I a trend trader versus is my personality more, I want to get in, get out, keep my risk down, trade for cash flow and go to the next trade, versus do I want to be patient and allow the trades to basically fluctuate in exchange for a much bigger move, and you're mentally okay with some of those profits vanishing in exchange for the next big move. Sounds like a lot, right? You're damn right it is. If you want to be somebody who is every single day expecting to make money, every single month expecting to see your account go up, you need to learn how to put these pieces together. You need to learn how to stack the order flow. But I'm going to tell you right now, and I'm going to prove to you that you can do this. I'm going to prove right now, because you might be like, oh my gosh, there's so much stuff, right? I'm going to prove it to you right now. How's that for a pause, right? So let's say we're now looking at Apple, and we know that this is just one day. And I think even now you could probably look at Apple and say, okay, wow, that's super obvious. I could recognize when there's energy candlesticks. I could recognize when there's indecision. I could recognize when it's just chopping back and forth and doing nothing. That's only on one day. So you could be like, all right, Apple for that entire day was a trend day. Apple on this day here, probably a day to trade momentum. Then you go out to what we keep talking about is what does the order flow look like from 1 week to the next? So you can see this 1 week indecision, right? 4 weeks of indecision turning into yes, oh yeah. And then we go up and it slows down with indecision and goes sideways for 5 weeks. So think about what I just showed you. Do you think with a little bit of training, whether it's here on YouTube or in the boot camp, do you think you could start to understand job number one, which is recognizing, is there order flow in the first place? If there is, then you learn to stack it. And stacking it means, wow, day traders are buying it, swing traders are buying it, hedge funds are buying it, and it's so obvious. Then we just go and determine, are we buying at the right time, which we call the optimal entry, or are we buying too late, which now we just shift over into momentum mode because we don't want to buy too late and have it come back on us. This is where trading becomes really fun. It's basically, am I in open road or am I in stop and go? If I'm in stop and go, I'm going to trade for cash flow. If it's open road, then I'm just going to hang on and look to build that position, which now takes us over into Roku. Roku, if you didn't happen to see it yesterday, had some really big news. It was up, I think, 18% yesterday. So if you take a look at the news over here, Roku pops on a multi-year agreement. So if you're investing or trading any of the streaming services, the big thing with streaming services is the amount of subscribers. So they get right into it over here. It was up 18% yesterday. This is the number. That's the big thing you want to pay attention to with subscriber services is Roku. So now our job now in Roku is determining how long has the smart money been buying it. And you can see here last year we were working the charts. We were building our levels. We were understanding when to get involved. Change your trend right here after a big pullback, which, by the way, just to give you some context here, this kind of a pullback is what a trend trader sits through in exchange for this next big move. This pause is what a trend trader sits through in exchange for the next big move. A momentum trader will look to catch this push, see melted candles, and you're gone, and you're not sitting through here. You're looking for it to push down, see melted candles, and get back involved in that move. Ride that move higher, see melted candles, you're out, and you're not caught here. So you can see very clearly here on Roku the two different types of traders and how you would read the tape, read the order flow, and trade in and out of those ideas in the first place. But now you can clearly see that Roku has had some pretty heavy selling. It was close to $500 up here for a while, almost $490. And now yesterday, the tape reversed pretty darn hard, right? Pretty darn hard. Big volume, everything that you possibly want to see to start a new move. So the question now comes in, should we be looking to buy Roku stock today? So if you go back to a lot of the lessons that we've been giving you every day, everything we do first is managing risk, right? Before we determine, we look at the order flow, we look at the timing of the entry. The next part is how much risk is appropriate for when I want to buy, which in this case would be Roku right now. If we are looking to buy Roku right now, and I want to take you to this area right here. Hopefully you've been watching and you've been a part of our community for a while. Let me zoom this out a little bit so it's a little bit easier to see. This downtrend broke right here. And at this moment right here, Roku traded on some heavier volume and broke out. And if you remember, hopefully you've been here for a while. And if you haven't been, please do me a favor, smash that like button. If you're giving you some value, hit that subscribe button, right? We actually discussed buying Roku at that spot because it went down, bottomed out, order flow started to reverse to the upside, volume looked good, but it's the first time it was reversing. Again, mentally, it's the first time that smart money's stepping in and starting to build a position, letting the story unfold. If it's their first time starting to build a position, you want to work your way into the trade so you have lower risk until we get feedback. What does that feedback look like? Well, a push and a pause. If it rallies and pauses, okay, we could consider adding to it. If it rallies and pulls right back to our entry, we have a small piece, we get out, and then we evaluate. So that's what actually happened over here. We got long, it rallied, came back, and when we started to see this indecision, let me actually make that a little bit bigger for you. Let me do this. It's probably easier. When it rallied and pulled back and we started to see all this indecision, we're like, okay, not following through. So now we're over here and we have the same situation, but now it's a little bit different. We have a story. We have a different catalyst where now we have 3 days of buying with massive volume. So now the right trade, the smart trade, whether you're momentum trading or not, at this particular point, it's the first time Roku is reversing. So this would be less share size on the initial entry. We are looking for the push to pause on light volume. Then we can consider looking to add to the position. I can't stress this strongly enough. I don't care if you're trading a $3,000 account or a $3 million account, managing your position size in the context of how long has the smart money been pushing that stock around will change everything. So when you understand momentum versus trend trading, you now know what type of trader you are. You now know what kind of situation it is. When you move to the next level, where now we're looking at how long has the smart money been involved in the stock? 1 day at this point. So you have 1 day and a news story versus 5 months of selling. So just think about that pressure right now, 5 months of selling versus 1 day and a pretty darn good news story. So if you're going to trade this catalyst and look for a smart way of working your way into this position, what I would be doing is my first piece. So again, just to give you some ideas, everybody wants to know, what does that mean? Well, essentially that means if I want to get up to 1,000 shares, for example, I'd probably have 300 shares right now. I'm building into the position the same way that the smart money is, but I'm not going to get my full share size until they commit more capital. So if you could think about it, if you have a friend who's looking to put a deal into, I'm going to buy a house or build a house, I'm going to first put up 10,000. And then after the construction is up and the A-frame is up and it looks great, then I'm going to put more money into it. That's what we're looking to do here. I keep pointing to the wrong side. That's what we're looking to do here. So hopefully you're understanding that we're working our way into these positions based on how obvious the order flow is prior to us putting that trade on. And if you're new to order flow is simply the deeper pockets with the big research teams starting to commit real capital. That's why when you hear me talk about ideas, I don't say trend. I say order flow because I want you to visualize, is buying still happening? Is real money being committed to that idea? So right now, again, we'll just pull this up so you can take a deeper look at it. That's the first time that Roku in 5 months, other than this one day, first time that big volume stepped up. And now we're looking to see, do they follow up? Very, very, very big difference. All right. Something else I want to talk about today that I think is kind of interesting. I don't know if anybody's ever seen this before. Elgato Stream Deck. I'm going to actually put this link in here for you. We talked about this last night on our coaching call, and I just want to bring it up again. I want to make it clear. I haven't used this yet, but if you use hotkeys in your day trading, this is a much, much easier way to set up your hotkeys, where instead of using all the keys on your keyboard or using whatever trading platform you have, you can literally set up these bigger buttons where it's like buy, sell, stop loss, trailing stop loss in just simple keys. So if you can imagine just a smaller keyboard that plugs into your computer that connects to your trading platform with just buy and sell buttons and prices, I think from what I could see, it looks like it's much easier to use than setting up the hotkeys on your actual keyboard. So I haven't used it yet, but I plan to try it. I'll give you an update after the holidays when I start to use it. I have too many things going on right now to change. But I wanted to give everybody the link. Maybe you can come back and tell me what you think of it. And if you tried to use it or if you're using it already, let me know. And let's share it with the community to see if it's worth trying. Again, especially if you're a day trader, not so much as a swing trader. So we talked about Roku. We talked about the market. We talked about the bullish echo. What's super cool, again, we talked about yesterday being market conditions for a bullish echo, where we were looking for one more day of buying, but not putting on new swing trades. So if you go and watch yesterday's video, that's exactly what we talked about. So if we talked about the SPY and we said one more day of buying, which is pretty much what we got, right? One more day of buying, but not looking to put on a new swing trade because the odds of reversing were pretty good. And that's what we got now. The futures are actually down. So what I want to get across here, what I want to really explain to everybody is that when you put these types of things together, when you understand how to read the momentum, when you understand what order flow looks like, when you understand the smart money is making a real commitment and they're following it up with more buying, think about how much more conviction you'll be trading with when you're reading the smart money as opposed to just reading the charts. It changes everything. Look, I have a reason. I hope you join the boot camp and come in with 30 days with me. And there's a lot of people here right now on the call. That's fine if you don't, because we have a great community. And I just showed you the kind of stuff that we go over. Even if you don't take that leap and come over there with us, I hope that you're understanding that trading can be a lot less intimidating if you simply understand the pieces that are unfolding. Stocks go up and down because smart money has demand or they're dumping it. When you see charts as order flow, as opposed to just the trend or the bull flag or the bear flag, and you are looking at it as saying, okay, what do I need to see in order to buy this stock with conviction? What do I need to see in the order flow in order to want to get out of this position? Everything changes. And I really hope that I'm showing you that even just on these YouTube videos, that what you're looking for is order flow. When you, it's kind of like the Matrix. Once you see it, you can't not see it. And again, if we go to the daily charts and we hop on over again into the SPY, and we're looking at even just as simple as the type of candles we're looking at, where you can clearly see it's either energy or indecision. That's it. There's nothing else. There's a billion different types of energy candlesticks, but do you really need 600 types of candlesticks when it's either really obvious or indecision? That's the only thing you need to know. And then when you take that a step further on why that's all you need to know, well, what does an energy candlestick tell us? Somebody with a lot of money had enough to buy it here and hold it and push it all the way up there, and they followed up because it stayed there. The other one, which is indecision, we call it a melted candle, where the body and the open are close to the same spot. It traded up, it traded down, and whether it's a daily candlestick, a 5-minute candlestick, it doesn't matter. It did all of that trading and opened and closed in the same spot. That's indecision. That means order flow is not obvious. So do you think you can like look at charts differently now, whether it's a 5-minute, a daily, a weekly, a monthly, or a 3-month candle? Again, we have monthly candles here. Do you think you could look at this now and make obvious decisions on whether buying or selling was going on and whether it was obvious? And then make a decision. If it's obvious, where you want to get involved. If it's not obvious, you're like, okay, that's great. No order flow. I'm going to have coffee. And you keep that money in your pocket. I want to inspire you, and I hope you take that the right way. It's just the way I'm wired. I want to inspire you that if trading is overwhelming for you right now, it's a lot easier to understand when you just understand that all we're looking for is order flow. If it's hard to find, it's not there. If it's obvious, then the next thing we do is you understand how to time entries and exits into and out of that order flow. Job number one is it obvious? Is order flow obvious? If it is, job number two, understanding how to time into that. Job number three is making sure you have the right position size, which is what we talked about in Roku there. We pull Roku up again, determining what the right share size is based on the current order flow. That's where trading becomes kind of fun, because now you're 100% in control of the outcome as opposed to hoping something happens. And again, this is a big part of what we train on everybody every day. What do I want to see, and what does that mean? Once you start talking about that prior to putting on the trade, you now become 100% in control of what happens, as opposed to, oh my gosh, it went down. Why did that happen? You already are answering those questions in your mind. If it's going up, it's because there's order flow. If it's going down, it's because there's supply getting dumped onto the market, and that's bearish order flow. Why? Look up why after the fact. Because honestly, do you really think you're going to out-research Goldman Sachs? No. Let their analysts do all the work, and then I'm not saying don't do the work. I want to make that clear. I'm not saying don't do research. What I am saying is your research on top of their research will have you trading with unshakable conviction when you understand that you're looking for the order flow. I want to end giving you a couple of ideas today. Actually, somebody's talking about AMD here. So we're going to hop over into a couple of ideas that I'm going to be looking to consider buying today if the market bottoms out and we start to see the market move back up a little bit. So AMD is actually a stock that we've been trading quite a bit for a while now. If based on everything we just said, does AMD have order flow for the last week or so? Well, we got melted candle, melted candle, melted candle. We have 3 days of indecision. 3 days of indecision while the market exploded to the upside. A little bit less obvious. It's not doing what the market is doing right now. So as of right now, if you're a momentum trader, what are you looking for? Indecision, indecision, indecision. So 3 days where the market exploded, the stock hasn't exploded. So a little bit less indecision. Again, this is where it gets kind of fun. If the market's exploding and this stock is showing indecision, this stock is not performing with the rest of the market, although it's not that far from all-time highs. So if we just saw indecision, 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 the next thing we're looking for is we want to get involved when we see energy. So that's kind of cool. So based on what we just said, the market exploding, this stock showing indecision, I could trade this stock, but I wouldn't go in with full share size. So remember the 3 things we talked about: stacking the order flow, reading the tape, and risk reversal. That last part of risk reversal is determining the share size based on how we read the tape and based on how we read the order flow. So long-term, big picture, AMD, it's not that far from all-time highs, right? You can see it actually broke out here finally. You can see how we're working the chart. You can see that it actually traded up, and now it broke that trend line. So now we need to get back above that level and get back above the breakout level. So right now, I would have lower share size if I was looking to work my way into AMD right now, okay? So I want to work up my way over into some other ideas that I'm looking at today. Micron is on my list today. RBLX is on my list today. And again, full transparency, I bought this breakout. It didn't follow through. I bought that one. It didn't follow through. So we're looking to see if it follows through today. TTD, I'm looking for, again, looks very, very similar on the weekly chart. It actually came back what we call a bullish U-turn today. So I'm looking to get involved in that one today as well. Qualcomm actually holding the bid pretty well up here. And you can see it's actually now paused into an inside candlestick after an energy candlestick, after a bullish gap. Think about that. We just said all that in one thing. Bullish gap, energy candlestick, melted candle, pause, looking for that bigger move to the upside. So Qualcomm looks like it's a little bit lower right now, but we're looking to see some follow through there. What else? FANG. If you remember, we've been talking about sector rotation, and the energy sector has worked its way up to the top of the last week. Not that good yesterday, but a couple of them right near a breakout level. So FANG is one that I'm looking for some follow through today. But again, just to be clear, it needs to trade through 116. Also in the tech area, MCHP. And give you some context, I'm only trading stocks that already have bullish order flow. If I do, they have a little bit bigger size. One other one that I want to finish up with today is Starbucks, which if you didn't happen to see it yesterday, the order flow on the stock is not awesome. However, we just broke this little bit longer term trend when it pulled back from all-time highs. And the stock just yesterday had a pretty significant upgrade to 130, which is all the way up here. So Starbucks has a catalyst to at least consider start building a position because it just broke that downtrend and starting to head back up to the other side. Okay. Obviously, everybody, I want to thank you so much for being here with me today. I hope I'm providing value. I hope I'm giving you new ways of thinking about the market. I hope I'm inspiring you to really believe that you can do this, but you need to understand what to look at and how to apply it. So hopefully I'm giving you some value to at least challenge yourself to what's possible and make you aware of what it takes to level up what you're doing. If I'm providing value, everybody, please do me a favor, smash that like button. I really appreciate it. It lets me know that I'm helping, and hit that subscribe button too. And I want you to know how much I appreciate that too, so you get some updates when we come out with new stuff. All right. Here's the book we talked about today, The Rule by Larry Hite. Pretty darn good. He was actually featured in Market Wizards. All right. Just to give everybody a heads up, I will not be here tomorrow. We have some other stuff we have to take care of tomorrow. So this is going to be the last live stream for the week. Have an awesome day, everybody. I will speak to you soon. Thank you so much. I'm very grateful.